A profound shift is underway in the global critical minerals landscape, with Switzerland emerging as an unexpected yet pivotal player. This traditionally neutral nation is now making a significant entry into the critical minerals market. This move signals a redefinition of its economic engagement on the world stage. Welcome to Geocapitalist, where we decode global wealth, one quiet power shift at a time. Today's episode, Switzerland's billion-dollar bet on Canada's lithium future. Subscribe now and let's uncover how a nation built on banking just entered the mineral game. A substantial investment of $1.2 billion by Zurich-based Helvisha Capital is slated for 2025. This capital injection targets the burgeoning lithium belts of Canada, specifically the Abbotibbei and James Bay regions. This financial commitment underscores a strategic reorientation. This development marks a notable departure from Switzerland's historical role. For centuries, the nation has primarily functioned as a global financial intermediary, a custodian of wealth. Its current trajectory suggests a more direct involvement in resource control. Lithium has been unequivocally identified as the cornerstone of the clean energy transition. Its unique properties make it indispensable for modern battery technology. Without it, the ambitious goals of decarbonization remain largely unattainable. Demand for lithium is surging at an unprecedented rate, primarily driven by the explosive growth of electric vehicles. As global economies pivot towards sustainable transportation, the need for reliable lithium supplies intensifies. This escalating demand places immense pressure on existing global supply chains. Currently, these supply chains exhibit a significant concentration of power. China, for instance, refines approximately 60% of the world's lithium. This dominance creates vulnerabilities and strategic dependencies for other nations. The strategic importance of lithium is encapsulated in a powerful maxim: control the minerals, control the future. This statement highlights the geopolitical leverage inherent in securing access to these vital resources. Nations and corporations are now actively competing for this control. In response to these global dynamics, Canada has articulated an ambitious critical minerals strategy for 2030. The overarching goal is to establish Canada as a leading Western lithium hub. This strategy aims to secure a vital position in the future energy economy. To achieve this, the Canadian government has allocated a substantial $3.8 billion. This funding is earmarked for critical infrastructure development, the establishment of new refineries, and attractive tax credits. These incentives are designed to stimulate domestic and foreign investment. The strategy emphasizes stability and transparency, crucial elements for attracting long-term foreign investment. By providing a clear regulatory framework and consistent policy, Canada seeks to de-risk investments in its critical minerals sector. This approach fosters confidence among international partners. Across Canada, different regions are specializing in various aspects of the lithium supply chain. Quebec, Manitoba, and Newfoundland are leading the charge in lithium extraction. Meanwhile, Ontario is strategically focusing on advanced processing capabilities, creating a comprehensive national ecosystem. Swiss financial institutions, including the successors to UBS and Credit Suisse, are leveraging their deep expertise in global finance. They are now channeling this proficiency to finance Europe's ambitious electric vehicle expansion. This represents a strategic pivot from traditional banking to supporting the green economy. Switzerland, through these financial mechanisms, effectively exports capital. In return, it imports a degree of control over essential resources. This sophisticated approach allows the nation to influence global supply chains without direct ownership of mining operations. This positions Switzerland as a key player in the financial architecture of the green energy revolution. Its role extends beyond mere investment. It is about shaping the economic pathways for sustainable development. The nation is becoming an indispensable conduit for green capital. Lithium is increasingly being viewed as the new gold in the global commodities market. In this evolving landscape, Zurich aims to hold the vault key. This metaphor underscores Switzerland's ambition to control the financial flows that underpin the lithium economy. Indeed, the financial currents are already flowing. For every ton of lithium mined in Quebec, a significant portion of the financing will likely have originated through Swiss institutions. This intricate financial web highlights Switzerland's central, yet often understated, role. Switzerland is quietly acting as a crucial broker between the European Union's ambitious energy goals and North America's abundant resources. This intermediary role facilitates vital connections in the global clean energy transition. It bridges geographical and economic divides. Europe currently faces a looming materials crisis, particularly concerning critical minerals like lithium. The continent is actively seeking stable and diversified lithium suppliers. This strategic imperative aims to significantly reduce its current reliance on China. Swiss energy funds are actively forging partnerships with key Canadian companies. These include Nemaska Lithium, Frontier Minerals, and Snow Lake Resources. These collaborations are foundational to building a robust transatlantic supply chain. Through these partnerships, Canadian firms gain invaluable access to European buyers and long-term financing. This direct connection allows them to bypass traditional Chinese middlemen. It streamlines the supply chain and enhances economic efficiency. Major industrial players are also integrating into this emerging network. Companies like BASF, Umicore, and Stellantis are actively linking their operations to this transatlantic corridor. Their involvement signifies the broad industry commitment to this new supply model. This represents a collective, concerted effort to build a Western lithium corridor. The aim is to create a supply chain that is resilient and independent of any single superpower's influence. This strategic autonomy is a key objective for all involved parties. This burgeoning alliance between Switzerland, Canada, and Europe offers significant benefits to U.S. automakers. Companies such as Tesla, General Motors, and Ford stand to gain secure access to North American lithium resources. This strengthens their domestic supply chains. This strategic approach helps U.S. companies mitigate various risks. It allows them to avoid potential tariffs and navigate complex geopolitical uncertainties. Securing a stable Western-aligned supply chain is paramount for long-term operational stability. This development represents a quiet yet profound shift in leverage for the West's future supply of critical minerals. It rebalances the global distribution of power in the clean energy sector. The implications extend far beyond mere economics. The future of the Western lithium supply chain may increasingly be financed in Zurich and mined in Quebec. This model suggests a distributed network of influence and production. It moves beyond a sole reliance on Washington for strategic direction and resource allocation. Switzerland's substantial investment transcends mere mineral acquisition. It is fundamentally about shaping the industries of the future. This strategic foresight positions the nation at the forefront of emerging global economic paradigms. Canada, in turn, benefits immensely as a key recipient and partner in this financial shift. The nation gains significant investment, technological expertise, and a strengthened position in the global critical minerals market. This partnership fosters mutual growth. The overarching message emanating from these developments is clear and compelling. Power in the 21st century will be managed through sophisticated financial mechanisms. It will not solely be determined by the physical extraction of resources. What matters now is who finances the extraction, who refines the supply chain, and who sets the prices that determine global demand. Nations like Switzerland understand that influence no longer requires armies or oil fields. It requires capital, credibility, and control of the data behind every transaction. Canada, in turn, offers the perfect counterpart: stability, transparency, and a vast portfolio of strategic minerals that meet every environmental and governance standard investors demand. Together, they form a model of 21st century cooperation, a blend of resource realism and financial precision. As the world rushes toward electrification, lithium isn't just a metal, it's the currency of transition, and those who master its flow, from mine to market, will quietly shape the next era of industrial power. So while headlines chase short-term politics, the real story is written in contracts, spreadsheets, and balance sheets. That's where the future is being built, and where nations like Canada and Switzerland are already cashing in. You've been watching Geocapitalist, where we decode global wealth, one quiet power shift at a time. If this analysis helped you see the bigger picture, check our next episode. It connects directly to what Canada is building. Subscribe to the channel so you don't miss the next chapter, because the next economic revolution isn't starting in Wall Street or Beijing. It's starting in places like Zurich, Quebec, and Newfoundland. And that's all for today's video. Thanks for watching, and see you next time.